So welcome back to another episode of the MoneyCodez. We actually have a special episode today. I don't do a lot of interviews, but we have Ken So, the CEO and founder of TillFul, as well as Flowcast, and we want to kind of do a little bit of a dialogue. I'm very excited about the platform that he has, and how it can be advantageous for small business entrepreneurs, but also the holder of over 13 patents. I did my homework. Over 13 patents. That's impressive. And you guys recently launched the TillFul, the mobile devices of what I believe it's iOS and Android.
It's iOS right now, but we are working on the Android version, and that should be coming out shortly.
Okay, perfect. So I'm very excited to pass the microphone over to Ken. So, and Ken, can you let us know? I know you're going to go more in depth on the actual TillFul platform, but what got you into being this, Silicon Valley, bringing tech, bringing finance together, being a disruptor? How did you get into this space?
Yeah, no, appreciate the time, Joel, and happy to be here. How I got here, been in Silicon Valley for 20 plus years. So, it's started off as an engineer. That's how I got the 13 patents way back when, and this, it feels like decades ago. But how I got here is really, my, kind of started off in a household of entrepreneurs and seeing how a lot of small business owners struggle getting working capital. So really the genesis of Flowcast and TillFul is the idea of leveraging data to make better and smarter credit decisions when it comes to small businesses. And our mission is really set out to transform and to build the new future for business credit. And happy to kind of share more about what we have built so far and how we can help small business owner, and then what the future looks like as we venture into the next 5-10 years.
Perfect. And most of the viewers know on this channel we talk a lot about personal finance. So we talk more so on how to optimize our personal credit profiles, making sure that our personal information is clean, reducing and disputing derogatory items, adding on helpful primary items in order so we can apply and get some great approval rates. I downloaded the app maybe I think 2 weeks ago. The first thing I noticed was there's a lot of information and a lot of transparency, right? And that's the first thing I really enjoyed when seeing the app. Can you touch on just a little bit about, for the person who they're a viewer of MoneyCodez, they're getting their personal approved, they're getting their credit strengthened, they're hearing a lot. There's just a lot out there. Where would you kind of start from? Like, what would be the easiest way to get them in?
Yeah, absolutely. I think a lot of people know about personal credit. It's their FICO and going onto platforms like Credit Karma, Credit Sesame. So a lot of people understand the personal credit score. What people don't know is the business credit and how complex and how disaggregated business credit is. And that's really what we're trying to dispel here, is really to let people understand and give transparency of what that is. If effectively TillFul is that Credit Karma for small business, and we are trying to make it transparent, make it accessible, and make it free for any business owner. Just looking at the backdrop of the past year during the pandemic, we've seen a lot of people becoming entrepreneurs themselves. A lot of businesses got started during COVID, and how do you navigate in this environment where you have all these young businesses that are sole prop to single member LLC? How do we start building business credit on day one, as opposed to taking years to establish a profile? And that's really what we're trying to help and give that transparency. I think the biggest advice would be education. Coming on to channels like this, it's always a great resource for any entrepreneur, any business owner to be able to educate themselves and be able to learn all the nuance, all the mechanics around business credit, and how the landscape is also changing as we speak. And I think we've seen probably one of the fastest change in credit scoring. A lot of the existing traditional credit reporting agencies are adapting to new technologies to be able to leverage new data to really better assess these businesses.
Yeah, we're seeing a lot of the FinTech companies come in the past, like I want to say a year or so, and it's really changing how the approval rates and what the consumers and even small businesses, the things that we were taught even 5 years ago, it really doesn't seem to be the exact same way as it is right now with all of these new companies and these Silicon Valley companies coming out.
Yeah, I mean, absolutely. I think the access to data really helped accelerate that transformation, and COVID in a way, being everything now moving away from traditional, branch, going to a branch to something completely virtual and online, that also accelerated that adoption of using AI, using machine learning to be able to do the credit assessment. And you see a lot of platform online lenders out there that can make decisions within less than 10 minutes, be able to fill out applications within 2 minutes. Those are services that are going to be table stakes that traditional lenders will have to kind of compete and catch up. And the whole PPP kind of uncover a lot of those issues around traditional underwriting process, traditional online application type process. So I think all that is really accelerated in terms of that whole landscape, in terms of improving how things are being done. And a lot of it is going to be completely automated currently and also in the future.
Yeah, we touched on that just like very briefly on the personal side. I did a video that just talked about how to make sure that your credit profile on the personal side is optimized to the point that when you're going and you're submitting, your application, there's not going to be an old lady with glasses looking line by line to make sure all that data is correct, or if there's a discrepancy with the spelling of your name or the address of your business, there's no one that's going to tap you on the shoulder while you're doing it online. So it's very important that we set up our profiles ahead of time. We touched on that on the personal side, but I'd love for you to jump in and kind of show us what we can kind of expect in the future with all these changes.
Yeah, I think what's happening in the market is because of the ease of accessing these different technologies when it comes to things like KYC, KYB, it's really as simple as an API call, to things around pulling your bank data, which is also with a single login and API call. It makes it very easy for a lender now to be able to get all this data points together in one place, a lot more so than the old ways where you do have a human person review all the application, all the different line items. And also fraud is whether it's personal or small business, it is a concern for lenders. And with all the various kind of fraud tools out there, that's really kind of helping automate that whole underwriting process. And so seeing a lot of that really kind of changing the landscape. And TillFul plays some role in that process, and mainly it's really to add value to the small business owner, not just on the underwriting side. And here, I do have prepared a set of slides to kind of help walk some of the users through and giving them a little bit more context of what we're trying to do and what value we bring to the business owner.
Perfect.
And I'll just jump right in, and feel free to interrupt me with questions, Joel. So again, just quick context on personal credit. A lot of people know about the score, the three different credit reporting agencies that you can access to, and all this is primarily based on the FICO scoring algorithm, and the breakdown of those 5 key parameters and parameters in guiding that score. Business credit is slightly different, and each of these credit reporting agencies does it very differently. So you have the DNB with the PAYDEX score, which is from 1 to 100, and it really measures the ability for the business to pay on time or late or delinquent and so forth. IntelliScore is based on different factors. Also, payment history is a big one, but also it looks at other factors like utilization, age, and any sort of derogatory items on the file. Equifax is also very similar, 1 to 100, and based on a set of these similar type factors. And then lastly, you got the FICO small business score, which is very similar to the approach that they take on the personal score side, but leveraging the business data. Now, one thing I would highly advise any small business owner to do on day one is not only to set your EIN and so forth, but also to to apply for a business checking account, business account, bank account. And really the motivation is to separate your any of your personal expense, any of your personal transaction from your business side. And that's going to be key as how lenders see you and how lenders evaluate a small business. Most lenders do not lend to small businesses that have a personal bank account. They need to have a business bank account in order to provide the funding. So that's, I would say that's probably, if any takeaway you will have from this call is really that will be the key one. This is becoming a very much of table stakes. So most online small business lenders now do have an online application where you would, within a couple of minutes, you should be able to fill that up pretty easily. And one thing that they will ask you to do is to log in to your bank account, your business bank account, using whether it's Plaid or Finicity or other portals. And the reason for that is, at the minimum, they're using it to verify your balance, verify your deposits, verify your identity. So those are kind of the key minimum reason for that access. The second is also getting a glimpse of your cash flow. And so every lender does it differently. Some are more sophisticated than others. The more sophisticated one would take on a lot more data points and using them to evaluate the creditworthiness and the credit health of your system, of your credit profile for your business. So what Flowcast is trying to do is really to make all this black box into a white box, so that make it very transparent for a business owner to know what is my health, what is my health score, what is that, in relation to what lenders would evaluate myself on. And by leveraging that data, what we want to create is effectively a Netflix-like experience. As anyone use Netflix, whenever you watch a movie, it makes highly precise recommendation of what other movies or shows that you're most interested in, and it, all that behind the scenes based on AI machine learning, all the data points that they take from you as well as everybody else that watches these shows to come up with that algorithm. So similarly, TillFul is doing the same thing, where we're leveraging the data that's available that we're capturing to be able to help the business owner with the right set of credit offers. And that's really the key for what we do. So it's very easy. You sign on, we get all your bank data together. Within a matter of seconds, we can match you with the right credit offers. So right now we have onboarded more than 30 different lending providers, whether those are super prime to subprime, and our idea is we just don't want to service top 5% of our user base, but rather 95% of our users. So everybody would have would get access to some form of credit, and credit does ranges quite a bit, whether that's line of credit to term loans to equipment financing to a business credit card. So we would match you up based on your need, based on your interests and so forth. TillFul score, it ranges also from 0 to 100. So we make it very easy for you to understand what is your personal or your business credit health. And it does fluctuate. So any transactions that you have in and out, if you add more accounts, it does change because now we have more data points of your business. So we aggregate all your accounts together. And so next I'll show what the app looks like, and to kind of walk you through and get a feel for what value we're trying to deliver for you as a business owner. So the onboarding process, the sign-up process is very simple. It takes less than a couple of minutes to sign up. All you need to do is to fill in some information about your business, your industry, time in business, and then connect to your bank accounts, your business bank accounts. And we do this simply securely. We don't share any of your data. It's all hosted in a secure cloud environment that no one has access to but yourself. We aggregate all your accounts together, and that could be your checking, your business checking, your business savings, to your business credit card accounts, any loan accounts you may have. We would aggregate all that data. Within a matter of 30 seconds, we can generate the score. Now this score does change, as if you have any positive cash flow coming in, to driving down that utilization, that will that would help kind of change your improve or decrease your score, and we would help you monitor that and send you alerts if your score changes by more than 5 points, so that you can stay on top of your financials. So here we can kind of show you how that score has changed over time, and what specific things that are influencing that score, whether it's your account balance, your cash flow stability, any utilization you have, things of that nature. So we take into account a lot of different data points in your bank accounts and your cash flow.
So quick question. So if I get an email that my score dropped, let's say 10 points or 15 points, I would get an alert from you all.
Correct.
Would I also see like an action plan on how to recover those points? So let's say I don't know anything about anything and I'm seeing a 15-point reduction. Is it just an alert, or is it, hey, we need to add either more cash flow, or we need to replace the funds that were just spent last week? Does it give us a little bit of insight on how we can bounce back?
Yeah, absolutely. So so we do inform and give you tips on what specific actions you can take to get your score back. For example, if you make 10 payments on time, the next 10 payments on time, that would help improve your score by 5 points. So we would make those suggestions on what scenarios would help you lead you back to a healthier score. And and we do this through email notification, but also push notification if you enable that in the app.
Okay, sounds good.
Completing your profile is important. We do want to stay on top of what type of business you're in, and if there are any kind of material changes to your business, that would help kind of inform our algorithm. Staying on top of your expenses, whether that's your rent, your recurring expenses, is also a good guide for us to get a better understanding of cash flow. Now, once we have that data, we can make offers. We can make match offers, and this could be in the form of suggesting credit offers that you may be, most likely be qualified for. But also, we would send you notification on pre-approvals. So to the extent you're pre-approved for $10,000, $20,000, $50,000 for a term loan or line of credit, we would be able to push that to you through a notification when the timing makes sense. So if you're in e-commerce, you have you got an upcoming holiday season, need to fulfill your inventory, we would be able to push those offers to you even before you would apply for funding. Once you get a pre-approval, then then you can complete your funding application, and then you would put in all your information in within a matter of a minute. We should kind of be able to finalize that process, and typically within 24 hours, we can make a final approval for that funding, and that's typically how we can help with our user base. And getting access to a score is really a means to an end, and the end is really getting working capital and access to that credit to fulfill your business needs. And that's really what we're intending to do, is to help you and making that process much more transparent, and bring you the right and the most competitive and most compelling offer, so that you as a business owner can focus on your business, don't need to worry too much about your cash flow, and us being effectively that virtual CFO, if you will, for the business owner.
So just to make sure I have it down correctly. So I have the TillFul software, I have the app. I input all of my information, my banking information. So TillFul and their algorithm, they're going to go ahead and play matchmaker. Right? They're going to be like Netflix. And depending on my unique personal profile or business profile, excuse me, TillFul is going to be able to not only suggest to me products that might suit where I am in the current point in time, but it's also going to be able to, and I don't want to misquote you, it's providing a pre-approval on certain products.
Correct. Yeah. Okay. So for mostly for the term loans and line of credit, we can provide you with pre-approvals if we believe you qualify for, and if you're not qualified for the pre-approvals, then we would try to surface typically the top 8 offers that you would be qualified for, whether that's more closer to like a business credit card or other type of products that we believe that you have better chance of getting an approval. We do surface the approval odds in the app that would tell you, is it an excellent chance of getting approval, or you have a lower chance of getting that approval. So it saves you time from applying if and you don't want to get rejected. And most of all of the offers that we work on, they do not require a hard pull on your personal credit. Some of the lenders do want to look at your FICO, your personal FICO, to make their underwriting decision, but we would never do a hard pull and have an inquiry on your personal credit. And that's really the goal for us, is really to separate your personal stuff with your business side of your credit, and start really building that credit journey for your small business.
Now, a quick question, since you mentioned personal, depending on where someone's at right now in their personal journey, if they're in a situation where they have a small business where they are cash flowing pretty well, but their personal FICO is not, let's say horrible, but it needs some work. TillFul is still going to be able to provide some suggestions as far as different credit products. Even with not a great FICO.
Yeah, I think if you don't have a great FICO, we do have lending partners that are willing to fund your business, even if you have 575 or below 600 FICO. They're still willing to fund, depending on what, looking at the business side of things, what the business look like. Typically, I would say time in business is important factor for a lot of the business lenders. Cash flow is important in terms of deposits, so they do look at typically the past 4 months of deposits and how consistent those deposits are. Some lenders can go down to $5,000 in monthly deposit. Most, I would say, are more comfortable at the 10,000 and above. So, as you get below the 10,000, then the cost is typically higher in terms of in terms of the what they call the factor rate or the interest. And so the reason why time in business is important is really to they want to get a feel for how long has this been in business, especially for businesses like e-commerce, where the barriers to exit is barriers to entry and barriers to exit are pretty low. So you don't want to, they don't want to take the risk of a business, even if not going out of business, but they can terminate pretty quickly, pretty easily. So they do want to see that longevity in time in business. Industry type is also important depending on the lenders. But our job is to figure out and find the right set of matching for the right for you as a business that's really tailor made for you.
Perfect. So you are playing matchmaking, and I want to make sure that the people that are listening, because for whatever reason there's like a misconception where it's like, okay, my personal credit is bad. I'm just going to build my business, but as you can see, it makes sense to optimize both if you're trying to go for maximum lending as well as approval, right?
Correct. Yeah.
Okay.
I think the idea of separating all your expenses and your deposits with your accounts, it really allows you to kind of start that journey on your business side, separate from your personal. And that's really the important part as you start to kind of build your business, on day one. And a lot of the traditional way of, buying Tradelines, and that's that's not what a lot of these lenders are looking for. I think a lot of them are underwriting increasingly based on cash flow type criteria, as opposed to, looking at D&B reports or Experian type reports. There are some that
I'm glad you said that. Yeah, I'm glad you said that, because there was quite a few like seminars we used to go back to, like way back in the day, and then you still hear about it now with going through the tiers, trying to get certain trade lines added onto your business in order to somehow trick the lender, so to speak. But I'm glad that you're speaking on that now, because it's something that it gets circulated a lot, right? That all you need is just trade lines. Forget what's in the bank, forget what the income is, forget the cash flow. Just manipulate a couple of trade lines and you're golden. So can you speak on that just a little bit more, on just what these lenders are really looking at? They're like, it's 2021, we're about to be in 2022. All of these metrics and all of this artificial intelligence and these AI machine, like it's the sophistication behind a lot of these underwriting systems is brilliant. What are they really looking for? What are they really paying attention to?
Absolutely. Besides some of the parameters I mentioned earlier, again, kind of cash flow is an important part. And cash flow, typically from reports like D&B and Experian or Equifax, you wouldn't be able to see real-time type cash flow. And so a lot of these, more modern online lenders, they do look at that real-time cash flow to determine what is that creditworthiness. In a COVID environment, it's unlikely a lender would want to utilize a report that's dated before pre-COVID, right? So that information is no longer valid, or their underwriting process, it's unlikely they're going to be based on that, solely on that type of information. Where these reports are typically used the most are in corporates or vendors that are granting payment terms and net terms to their customers. So when you hear about net 30, net 45, net 60, a lot of the credit departments within these these corporate are utilizing D&B report, utilizing Experian, business and Equifax to determine are these customer eligible for a net 30 term, and so forth. So that's where we're seeing most usage at the moment.
That's more for like the Ulines and the companies like that, the vendors.
Exactly. For lenders, there are some that still leverages these reports, but increasingly we're seeing more and more that are building their own credit model, building their own underwriting that's leveraging real-time cash flow type data.
It's more accurate for them.
So
nav.com. So nav is pretty popular, in the community. They provide a little bit of that matchmaking, and then again, they also provide the Dun & Bradstreet score, I believe, Experian as well. How would you differentiate TillFul and what nav tries to provide? Based off what we just talked about.
I mean, nav is it's a good service. They have been able to provide D&B, Experian, Equifax score, and mostly for free. And I know they do have a subscription model. Where we differentiate is that we're not repurposing or reselling those score. While we're leveraging that real-time cash flow data to give our business owner transparency about their business health. And that our attempt is to kind of mimic what a lot of these online lenders and new lenders are utilizing, and kind of giving you a glimpse of what that credit model, that credit decisioning looks like for these lenders. And we are working pretty closely with them and be able to, now we have a lot of their credit criteria models that we're developing. So by leveraging this TillFul score, we can intelligently match them up with the right lender and make it much more transparent. So they may be qualified for say non-deck term loan, but not for a payability and so forth. So we can accurately match them up that way based on the score that we've developed.
Okay. I had a random question about Intuit acquiring Credit Karma
Yeah.
for 8 billion.
Yeah.
We did a video on this channel about that, I think a couple months back. And reading through their article in their press release, they're saying that they wanted to be able to, I guess, more intelligently be able to do the matchmaking
Yeah.
when it comes to providing offers for their clientele. That's huge. 8 billion is freaking huge. When you hear that, and when like regular people like me hear that, what should we as small business entrepreneurs, people that are getting into the space, what is this foreshadowing? Like, what is this like what's really going on when
Yeah.
these $8 billion acquisitions? Like, what's really going on with this, and what should we be prepared for when we see these type of acquisitions?
Yeah, no, that's good questions. I think from a small business owner standpoint, it's a big positive for them, because what this means is it would give them ease of access to credit a lot easier than the traditional way of going to a traditional bank or credit union or community bank. Now every non-bank is trying to become a bank, so there's this whole notion of what we call embedded finance, embedded lending. Amazon is basically becoming a bank. Apple is becoming a bank. You got Shopify has giving access to capital for the merchants. So a lot of these non-banks are adding on FinTech capability and finance capability, which is one of the reasons why there's a ton of these banking as a service startup that's popped up in the past several years, and why like a lot of VC dollars are flowing into these banking as a service, because they're enabling non-banks to become banks. And then when non-banks become banks, then what that means to business owners now have more access to capital. If I'm a Shopify seller or a merchant, now I have options of going, tapping into Shopify Capital or other lenders that are lending through Shopify. Same on selling stuff on Amazon, you have access to that now. I think it's a positive when you see some of these kind of big acquisitions happening, whether that's last year you got American Express buying Cabbage, and you got Innova buying On Deck. So I think that theme will continue on, and the theme of other services will adding on lending will continue it on, and really why they're doing it is because they have the data, right? So Amazon probably has the deepest data than anybody else. They know when somebody makes a search to all the way to when somebody makes a payment. And that no one really has that type of level of information. Google only has search all the way to a click, right? They know the intent, but they don't know whether that user actually made that purchase at the end of the day. But Amazon does. So that is very powerful, and they leverage that to make lending decision, to make credit decision. So we're going to see a lot of these e-commerce online platforms adding on these capability. And in my view, it's a big positive for whether you're a consumer or a small business owner. You have a much easier way of getting access, and definitely much better than 50 years ago when you think about getting a business loan, you got to build a business case and business plan, pitch it to a bank. None of that will be required now.
That's very true, and I think competition is good. If you had one piece of advice to give to a small business owner, and it's not necessarily for like an approval for a term loan or for a credit card, for someone that's just getting in there, and the reason why I asked this is because I saw on one of the sites, I'm not sure if it was Berkeley or not, if you're someone that is an entrepreneur and you're trying to build a successful business, you only hire those that you can see yourself working for. I took that and I thought that was brilliant. But if there was one piece of advice,
that line was from Mark Zuckerberg, not
from Mark Zuckerberg. Yeah, I saw that. I wanted to give you the credit.
I don't want to get sued from him.
But it's still good to hear. It's still good to hear because we don't really think about it. There's such a thing as too much information out here. So what would be the one thing that you can kind of narrow down on? Zuckerberg aside.
Yeah, I think I'll say build. At the end of the day, business is about the people. So if you are looking to build a sizable business, building the right team is probably the most critical thing. And in this current environment, hiring is always is tough, but finding that right people and that right chemistry is all is the most important thing. And I think a lot of people kind of sort of think too much about the business side, but sort of not really focusing on the kind of the empathy side of things, and having that empathy with your employees, with your customers, your partners. That oftentimes is underrated and overlooked. I would say that, like me, if I'm a business owner looking to build a sizable business, that's probably something you always kind of have to keep in the back of your mind, because sales numbers always kind of get in the way, and that's all oftentimes keep you up at night. But you need the people really to build a business. So without that, it's difficult. So I would say that is probably, if I kind of look back on my company and also other founders that I've talked to, the people side of things is the most important thing.
Yeah, I agree. I think I have a video on the channel about emotional intelligence being one of the things that we don't spend enough time on as entrepreneurs, and what we think leads us to success, we tend to skip out on that. But
there was a just a side note. There was a study. I would send it to you and dig it up, about the top CEOs in the US, and the takeaway is those CEOs tend to have very high EQ. And average IQ. They're not always the smartest person in the room, but they oftentimes have the highest EQ. And if you're looking to become that leader, that is something to certainly to aspire to and to focus on.
And that's the thing that I have to kind of check myself on, because I love information, I love the data, but researching, like how you mentioned with these CEOs, there are other aspects that we need to pay attention to. If we're doing all this, we want to be successful entrepreneurs, so we can't just think that EQ does not matter at all, right? It all plays a part, right?
Absolutely.
So that's awesome. So I did my homework on the app for the past 2 weeks. I also enjoyed the articles that you guys have embedded inside of there. Great articles in there. And for everyone that's listening, everyone that's trying to get an understanding of just like the benefit of what TillFul really is offering. Number one for me, I think the transparency, logging in there, and it's not convoluted. There's not like a ton of buttons and reports that you're going to just drown yourself in. A few clicks, you can kind of get a good gauge of where you're sitting at with your business. So right now, what I'm going to likely do is just put a link down in the description so everyone can just go ahead and log in. And you mentioned before that it is iOS only. We're not on Android yet, correct?
Yeah, but we do have a web app, so you could access the TillFul through the web app through any mobile browser. So you can access on Android.
Awesome. Yeah. So now, Ken, did we miss anything? I know we kind of.
No, I think we had a great call, great chat. Yeah, I think we covered quite a bit.
Yeah, I enjoyed it, man.
Yeah.
So I'll go ahead and just and close this one. Everyone, go ahead and go down in the description below. Go ahead and sign up for TillFul. It is free. You don't have to worry about anything. Ken, any social media you want to plug? Anything that we need to be aware of upcoming? Any social media sites you need to be plugged into, or should we just stick with TillFul for the moment?
Yeah, and there's going to be an announcement. I won't give it away right now, but there is going to be an announcement in a couple of weeks from TillFul. It's an exciting product that we're launching, awesome. And really to help not only to give access to credit, but also to help build credit, and that's coming up in a couple of weeks.
All right, so you definitely have to shoot me a text when this gets revealed. So okay, all right, perfect, man, perfect. All right, so guys, this is all we have for you for today. You already know what to do. Make sure to like, subscribe, go down in the comments, let me know what your thoughts are, and we're going to check out in the next video.
Awesome.
Peace.